Once every century or so, our planet stops. A global crisis changes everything. What will a post-COVID-19 world look like? Immense disruption can spur reinvention in healthcare, social welfare, work, education, and business. Faced with catastrophe, societies can crumble or gain strength. Countries can go to war or find new ways to work together. Governments can use new technologies as a tool for creation or destruction. The Bloomberg New Economy connects leaders of East and West to discuss a better world. Our neutral platform facilitates purposeful, data-driven conversations on pathways to common prosperity. Inequality costs lives. Poverty incubates disease. Climate change creates hunger and refugees. When this pandemic is over, we must build a new economy that works for everybody.
Greetings and welcome to Bloomberg New Economy Conversations, the series where we explore how businesses and governments around the world are responding to the coronavirus pandemic. In today's conversation, we'll take a look at emerging markets, which are facing a historic crisis. Some say an existential threat. We've got a terrific lineup of speakers joining us today, so we're going to get right into the discussion. If you've joined us for our conversation series before, don't be fooled by my slick new backdrop. As always, I'm joining you from rural New Hampshire, which is a long way from Bloomberg headquarters in New York City. I'd like to welcome our global community of Bloomberg economy delegates who've attended the forum in Beijing and Singapore these past 2 years. We also welcome the thousands of listeners tuning in on social media and via the Bloomberg terminal. There will be opportunities throughout this conversation for real-time input from you, our audience. I encourage you to submit questions in the text box in the bottom right of your screen, and I'll invite you to vote in live polling in the top right of your screen. If at any point you encounter technical difficulties, a simple refresh of your browser should help get things back on track. Later in the program, we'll bring you recorded interviews with the Inter-American Development Bank President Luis Alberto Moreno and global economist Dambisa Moyo. But first, it's my pleasure to introduce our two guests. Josephine Wapakabulo. Josephine is the founder and the managing director of TIG Africa, a Dubai-based consulting firm. She previously served as the founding CEO of Uganda's national oil company. Josephine, thank you for joining us.
Thank you. Thank you for having me.
Hendrik Dutoit. Hendrik is the founder and CEO of 91, a South African-based asset management business, which demerged from parent company Investec and publicly listed on the London and Johannesburg stock exchanges in March. Welcome to the program, Hendrik.
Thank you, Andy, and good afternoon, listeners.
Hendrik, I'd like to start with you. You, as I mentioned, you just listed an investment business focused on emerging markets in the midst of a historic crisis in the developing world. On the other hand, emerging markets have never been cheaper. Between despair and hope, from an investment perspective, how should we look at emerging markets right now?
Andy, firstly, there is always a crisis somewhere when you're an investor. And, building a business and serving the long-term investment needs of asset owners doesn't wait, doesn't stop. You need to do it. So right now, of course, the asset class is very cheap. emerging markets are challenged largely by, not because of their own doing, but by the lack of global leadership in this particular crisis. But I would remind you that emerging markets, this is definitely not an existential threat. We've seen enormous progress in per capita incomes, in living standards across the world, and particularly in emerging markets. And that is not going to stop. It may pause. It may lead to pressures on individual companies or individual countries. I'm talking to you sitting in rural New Hampshire. The US was once the most exciting emerging market in the world, may I remind, when China dominated the global economy.
Yeah, so, okay, people have been writing off emerging markets for decades, but this time, surely it is different. I mean, it's a cascading series of crises. It's a health crisis, it's a financial crisis, it's an economic crisis. We're in the middle of a trade war or a financial war, which we'll talk about later, between the US and China. How do we look at this? I mean, could this be the one that might conceivably bring down the emerging market universe?
Well, I don't think so, but it's an ever-changing universe. If you look at emerging markets in 2000, it was dominated, the indices were dominated by Latin America. China had, in the 1980s, four listed stocks. Today, China has more public companies than the United States of America, actually about double the number. It has a capital market second largest in the world. That's an emerging market. India, you've seen even this week the vast investments that Facebook is putting into India right now, going after the payment system there. But there will be a difference. And of course, emerging markets now are completely dominated by Asia rather than Latin America. Africa has always been pretty light, pretty small, except for when South Africa came in 94, and the Asian countries weren't as recognized as they probably should have been at that point. And so I would think in emerging market is exactly like in investing in the developed world. It's all about picking the right assets, the right businesses. When you today see technology companies dominate the world, I must remind you that in the top 10 technology companies, there are at least three companies that came from the emerging markets. And if you look at mobile telephony, whether it's pre or post Huawei, Samsung is still there. So this is a game. The world is actually becoming a more complicated place because it's not simple, it's not flat anymore. There's not one system of rules, and I think I'm really worried about the rules-based system breaking down, because that will stop the growth and the development of the poorer countries rather than affect the rich countries initially. But in the long run, it will affect everyone. So what we need to do is reset a global order which reflects the political realities of the world and the economic realities. And one thing we do know is the world is shifting towards Asia, and Asia is the center of emerging markets. So it's the same trade that Marco Polo had. It's the same trade that the British East India Company had, and that trade is not about to end.
Okay, I want to put up a graphic for you both to take a look at. Actually, Hendrik, it comes, I believe, from your research division, which looks at the universe of emerging markets. Talk us through this, and how should we interpret this?
I mean, really, this chart is just trying to show. I'm sorry to use my glasses, and you're going to spot that I've reached the age where I have to use glasses to look at a chart in front of me. But it's really about fiscal strength and the composite health score. And it's very interesting that there are very few countries in the bottom left, which is the weakest, which is health issues plus fiscal risks. And really, Brazil is the standout, and that's the real vulnerable place where you probably have a quite healthy young population. In spite of the huge COVID numbers we've seen, it's still per capita much lower than the European experience, much, much lower. And also it's a country with more space, but it's fiscally vulnerable. Similarly, South Africa has moved into the fiscally vulnerable space with picking up the size of the bubble tells you, the significance of the issue. And you can see it's picked up because the COVID cases have picked up, but it's still extremely small. So I would say the emerging market issue remains a fiscal issue. The developed world issue was largely a health issue. And then older demographics do worse. Fortunately, the countries with the older demographics like Russia have more resilient fiscal positions. So it becomes a picking of the country, picking of the business, as opposed to a bland statement, all emerging markets are suffering or all developed. And I might remind you that for the 2020, developed world economic growth forecasts are far worse than emerging market forecasts. I think the 2021 would be really interesting to see whether the bounce back would be similar or whether emerging markets would lose their edge.
Josephine, let's pick up on this sort of glass half full, half empty theme. Obviously, we can't lump all, as Hendrik said, we can't lump all emerging markets together. In fact, it's interesting, several of the biggest emerging markets, China, South Korea, Taiwan, have been the most successful in combating COVID-19 and are now leading the global recovery. But tell us about Africa. How do we understand Africa? I mean, we were getting dire warnings from the United Nations. They projected 1 billion or more infections, millions of deaths, multiple famines, societal collapse, including in fragile states and conflict zones. But that doesn't seem to have happened. What is the situation there?
So, I mean, it's an excellent question, Andy, because I think, like you said, if you go back to where we were in March, everyone had the dire predictions. And I think since then we've seen, I think we're at about 145,000 cases, 4,500 deaths across Africa, particularly in the north and in the south. So I think there'll be ongoing debates and there's not enough data to definitively say why or why not. But what we can say is, I think because many African countries knew about the fragility of their healthcare systems, a lot of them were taking action sort of late February, earlier. You go to places like Uganda, Senegal, Ghana, there was a lot of countries that took initiative to lock down in sort of very highly pressured, highly delicate decisions that impacted the economies, but they realized if we didn't close our borders with our fragile healthcare systems, we could have had the catastrophe that's predicted. Now, we still don't know if there'll be a resurgence. We hope not, but there are still some scientists that say they may be. For now, it seems on the whole, on a slightly more general scale, if you look at the data, there's been relatively good containment. We're seeing economies are starting to open up. But we can't underestimate the sort of social impact in terms of the nature of our informal economies, the nature of our very densely populated cities with the urban poor, and the impact the shutdowns have had on food availability and unemployment. The numbers are high, but there has been at the regional, at the country levels, very varied but similar initiatives around food aid, cash directly transferred in places like Kenya directly to their people, the international community stepping in at various levels, whether it's emergency relief now, health support. So we've seen a variation of responses. So I think the actions and the initiatives taken by a lot of the heads of state across Africa to shut down a lot sooner, a lot of support both regionally with the AU and internationally has helped. We still need to see where this ends up. We still need to see where this narrative ends up regarding COVID specifically. The impact as well, I think there is still ongoing debate on the merits of a lockdown in some of the countries and whether it should have been done or not, and whether the style of lockdown that mirrored a lot of the Western lockdowns was the best approach for Africa, particularly African countries where you can have quite a few. I think one Indian economist called it, instead of social distancing, social compression, because suddenly, people who are in homes of 10 or 8 have to see each other every day, and you're actually more exposed to the disease. So like anything, when it happens the first time, you're learning. And I think as the data comes out, we will see whether in addressing COVID, did we leave the door open for other diseases that are ongoing, like malaria, like diarrhea, like, other diseases that we know are issues? So it's a mixed story today regarding how we've handled COVID and the impact. I think on the glass half full, there is some trends we're starting to see that may be outliers, but are starting to look quite interesting in different sectors. Technology, we're really seeing an acceleration. I think globally, everyone has seen a boom in e-commerce, and that is very true equally for Africa. So I think, areas where there was already a lot of innovation and research around e-commerce, the logistics optimization, last mile delivery, which has been some of the challenge in Africa. I think people are now looking at it in a fresh way. At least I'm seeing a lot more activity and innovation happening around that. I think we're going to see more opportunities through the Continental Free Trade Agreement that's happening across Africa. When supply and demand globally shuts down, you have to look more internally to your regional and local supply chains to address the problem. And I think we're seeing an opportunity when the trade program comes forward to actually maximize on that.
Yeah, I think.
Okay, let's talk about energy. Sorry, Hendrik, yes, please.
Yeah, Andy, sorry, apologies, Josephine, for butting in. I thought you were done there. Are you done?
No. Yes, you can go ahead.
Because I just wanted to endorse your point that one thing we've learned here is not to implement a solution that someone else who may seem clever and may seem to know what they're doing should just copy that. So and I think some of the African countries very much copied the lockdown procedures of developed countries where they had money to pay for furloughed employees, where they have different kind of systems, where the health system is much bigger. And we will still count the costs of the malaria babies. We will still count the costs of the inoculations that didn't happen. And on the other hand, I do believe that the emerging market populations, by and large, and particularly the poor countries, have very resilient populations. And have populations which do not live in zero risk worlds, like, for example, people in some European countries want to live in. And that gives them an ability to respond and react to very deep crises, which is often underestimated. And one point I'd just like to leave is most emerging markets, there is no desire to turn inwards. The desire you see in the United States to turn inwards, cut off the world. The sort of political pressures people face in the wealthy countries to do everything local, and that the emerging market people, by and large, want to compete, as they have been for the last 20 years, very effectively for jobs from the developed world. And I think this moment is not going to stop that. In some countries, the fragility may put business back very far because businesses may be closed full time as they lose space in supply chains, or as the countries, the political leadership in the countries become all the more populist to stay in power. But I think the essential approach from people in emerging markets are simply to get up in the morning, do their very best, and now with technology available and freely available, they are just going to capture that. And that's where my optimism for emerging market comes in. It's not a cyclical optimism. It's a very, very long-term view.
Yeah.
Okay, there's the optimistic view. Let's see what our audience thinks about this. I want to go to our first audience poll. Here's the question: what does the future look like for emerging economies? And you've got four options: V-shaped recovery, U-shaped recovery, L-shaped recovery, decade of lost growth. Perhaps the only one missing is the W-shaped recovery. But there's your four options. Josephine, what would be your answer to that question?
Yeah, I think once again, it's just too soon to give something definitive. I think somewhere between a U and a V is the general discussion that I've seen, and the that, you know, there will be a downturn, there will be an upturn. It's just a question of how long are we going to be in a downturn before we go up. So I think it's one of those that there'll always be varying opinions. I'm too optimistic to believe in the L. I think we're more looking at a V or a U, and general debate and consensus is somewhere around there. And then depending on the data, depending on if there'll be a resurgence, as we emerge and learn and get more data, really will impact the length of time. But right now it's just too soon to sort of be that definitive.
And I think we've got to
briefly, Hendrik, which one would you choose?
We've got to differentiate between the energy producers and the rest, because the energy producers have been hit by something much harder than even the COVID hit of late, which we haven't really mentioned. Whereas the energy importers are getting the benefit, and those who are going to open and restructure their economy. And my last point is just, I've seen countries where governments have been too passive and where they've not used the crisis. And those are the ones in the emerging market universe I'd be scared of, those who can't grab the opportunity and deal with the structural adjustment that's necessary.
Josephine, as I mentioned in the introduction, you used to run the Uganda National Oil Company. How does the collapsing energy prices play out in an economy like Uganda?
So it's really interesting. There was a study that just came out from Reichstad about the current sort of flood of oil and gas assets that are on sale. I think they estimated there's about 5 billion barrels recoverable right now available on sale globally, big proportion in emerging markets. Equally, natural gas, I think, is the equivalent of 7.5 billion. So there's suddenly this big glut of people trying to sell assets for various reasons. Some was happening before the crisis. I think the crisis has accelerated that. And majority of the sale is around producing assets or pre-designed, pre-feed type assets. So somewhere like Uganda, where we're sort of we're in development phase, low prices help us because a lot of the services will be cheaper. And hopefully by the time we start producing, the prices will be higher. But what is an interesting dynamic that I'm observing and I'm seeing in my network is a lot of these assets, at least that I'm coming across in Africa in oil and natural gas that are becoming available, are being bought up by indigenous African oil and gas firms. And so it'll be quite interesting because suddenly the prices that they're going at, it's almost a bit of a fire sale, is now accessible to them. So it'll be a really interesting trend to watch over time if this increased ownership by indigenous African oil and gas firms of assets across the region and trying to consolidate them, what that looks like in 3 to 5 years. So it's a sort of interesting time in oil and gas. Obviously, there's people really trying to sell, but it's sort of created this window of opportunity for indigenous African oil and gas firms.
Okay, let's look at the way that our audience views the world, pretty much in line with our speakers. 64% see a U-shaped recovery, only 14% see a lost decade of growth. That seems to be a reasonably optimistic forecast for emerging economies. I want to go now to a interview that I did yesterday with Luis Alberto Moreno, who's the president of the Inter-American Development Bank. Let's listen to that conversation focused on Latin America. Good morning, Luis. Welcome to the program. You were at the helm of the Inter-American Development Bank during the 2008 financial crisis. For Latin America, how does COVID-19 crisis compare?
Well, this is almost like the Spanish flu and the Great Depression at the same time, because clearly during the financial crisis, it was probably the first financial crisis that didn't start in Latin America in a long time. The one that we had, it was, as you know, in developed markets. And at the time, the debt to GDP ratios in Latin America were about 40%. The fiscal surpluses on average were about 0.3%. Which meant that Latin America had the capacity to weather the storm. And this is not only what Latin America did, but most emerging markets bounced back very quickly after the financial crisis. And they essentially began a process of growth that helped and brought up the rest of the world. Today is very different. We start with, I guess you could call it pre-existing conditions, where we have 2.8% of average fiscal deficits, about 60% of debt to GDP ratios. But the combination of a drop of in remittances, the monies that Latin Americans send back home, is going to be a drop of 30% that affects mostly Central American and Caribbean countries. The profound drop in tourism that, again, doesn't help many of the countries in the Caribbean, but throughout the region. And then the compression of commodity prices, and finally a sudden stop of financing, all at the same time, are going to bring Latin American countries to very negative growth. We estimate this year to the tune of 5.5%.
Okay, I want to ask you about an op-ed piece that you wrote for the Washington Post last week, in which you note this desperate scramble for face masks, other medical protective gear in Latin America, which you blame on global supply chains shifting to Asia. This pivot to Asia, you say, was short-sighted. And you conclude that there is now a huge opportunity to bring a lot of this manufacturing back to the Americas and to build new regional trading arrangements. So a couple of questions. First of all, how will Latin American economies manage to invest in a manufacturing renaissance in the middle of the crisis that you have just described, the biggest financial and health crisis in a century, perhaps in history?
Andy, I look at this more in terms of the consequences of COVID. And one of them certainly is going to be a lot of regionalization of production. And supply chains, as we know them, are going to change significantly. There's already a lot of pressure to nearshore. And the big factories of the world clearly are in Asia and Europe and in North America. Question is, how can we move to something not just made in America, but made in the Americas? And clearly with medical equipment is already happening, because in this kind of Wild West supply kind of problems, countries started to have to produce respirators using 3D printing, all kinds of medical equipment at home. And I think increasingly what you're going to see is a smart import substitution process where you can regionalize production. And I think this can begin to help Latin American countries to have more trade within themselves. If you look at Asia or Europe, trade within those regions is above 50 or 60%. In Latin America, is namely only 18%. So we have a big space to grow. And clearly with the US and North American market, I think we can do far more. That, of course, is going to imply not a pivot to Asia, but a pivot away from Asia and into the Americas.
Okay, so you say in this op-ed that countries in Latin America and the Caribbean must upgrade their ports, their airports, their broadband networks, and so on. This is going to cost billions of dollars. Where's the money going to come from? Argentina has defaulted on its debt. 16 countries in the region, 16 of those countries have gone to the IMF for emergency financial assistance. Who pays for it?
Clearly, part of the growth story going forward is going to be a lot of public investment. I mean, this is, I guess, if we put it in a word, is Keynes is back, as we remember during the Great Depression. It's going to be a lot of push coming from governments regardless, because of what you just mentioned. But clearly, I think there's space for private investment around, expansion of bandwidth and increase of bandwidth penetration. And I think that's something that is self-financing. And in terms of infrastructure, with absent that, we're not going to be able to do the kinds of physical integration and trade arrangements beyond simply trade agreements, but rather the hardcore part, the hardware of the integration that is needed. And that's going to mean, like in the discussion in the United States already, which is you should put more money into infrastructure, because that has a huge economic multiplier. And that's what's going to begin to push growth back up.
Let's get to China. Surely China gets a say in all this. I mean, it's one of the biggest. It is, I think, the biggest lender to the region, and the plan, as you laid out, sort of upends this relationship potentially between Latin America and China, which is Latin America shipping raw materials to China, and in return buying electronics and other high-end Chinese manufacturers. Is China going to go along with this?
Look, I mean, I think Chinese consumption of Latin American commodities has been a good thing for Latin America. It basically helped propel much of our growth. It's not saying to do things away from China or Asia in general. I think Latin America, like any country in the world, has to find a way to grow more, and it's got to be through trade. I think the opportunity, however, is to do more within the Americas. And certainly, if you observe the trade that we currently have, largely the trade with China is concentrated in 5 commodities. Our trade, let's say, with North America is far more diversified. And I think that's precisely the opportunity.
And what about the United States? Is it really possible to conceive of a big, bold, pan-American trading arrangement when you have a president in the White House who despises multilateral trade deals and is busy erecting protectionist barriers?
Look, of course, I think COVID will definitely imply a rethink of many things. Already, there's plenty of free trade agreements across Latin America with the United States. In fact, every country on the Pacific, from Canada all the way down to Chile, has a trade agreement with the United States, with the exception of Ecuador. So we already have a set of trade agreements in place. I think there is definitely a possibility to have something bigger. And that's really the challenge. I think regardless of that, I think we got to do our own in Latin America within the region to do much more of regional trading and increase it that way. But I think at the end, if history is any lesson, it was after the Great Depression, the bounce back in the U.S. economy that helped Latin American economies come back up. I hope we can do the same.
Before that happens, are we likely to see a financial crisis in Latin America, another lost decade?
Well, look, I think there's still a lot of things that we don't know. Certainly, those risks are there. I think definitely what we're seeing already in terms of the contraction of our economies, the increase in unemployment, and the increases in poverty are huge. But without a doubt, a lot will depend on how the rest of the world economy bounces back. That will help or not Latin American economies. And in terms of debt, yes, we're going to have challenges with debt. As I was saying, just from January this year, where we were about a little less than 60% debt to GDP ratio, we could be looking at close to 75% at the end of the year. And that happens like when you use your credit card. You first get the goods, and then you have to start worrying about paying them. And we won't see that discussion until, I would say into next year. But that's going to be a huge challenge, and a huge challenge not just for Latin American emerging markets, but throughout the emerging market world.
Do you think China is going to come to the table when it comes to debt? I mean, there's a lot of talk. China has already announced, or the Global Times, as a matter of fact, yesterday had an article saying that China is going to scale back its lending to the region. Do you think that it's going to forgive some of this debt, or is it just going to be, a question of freezing debt repayments? Where does China stand on the whole issue of debt in Latin America?
Well, look, in the context of the G20, they were big advocates of having, as it was done, kind of the debt forgiveness that has been talked about for the poorest countries. But Latin America is largely middle income countries, and we still have, there is nothing there in terms of debt forgiveness, not yet. But I think as we go forward, I mean, there was the Brady plan that was done in Latin America years ago, when Latin American economies coming out of what was called then the lost decade of Latin America, used zero coupon bonds to basically put a floor to help countries work themselves out of the debt overhang they did. It wasn't a question of getting more debt. Countries could not take on more debt to grow. So, I mean, I think it's too early to start into this discussion. I just hope that that we manage this in a good way. I think the fact that the U.S. has done the kind of stimulus it has done, it's very important to basically support the strength of the U.S. economy.
Final question on business. Rich countries have spent colossal sums of money bailing out businesses, big and small. Who is going to come to the rescue of smaller Latin American businesses?
Look, I think like happens in all of these crises, there's going to be processes of consolidation. There will be even strong Latin American or multi-Latina companies, as they're typically referred to, which some are healthy, some will have the capacity to absorb others. There will be lots of business opportunity. Governments will probably have to take on some strategic industries that have a challenge, like you've done, for instance, with airlines in the U.S. I mean, things like that we're going to start seeing a lot. I hope that is something that we find a way to quickly work ourselves out of this. But it's mechanisms that all countries are looking at to try to keep the private sector going.
Luis Alberto Moreno, thank you for your insights. It's much appreciated.
Thank you, Andy.
Okay, we just heard Luis Moreno, Hendrik, talking about creating a giant trade and manufacturing zone in Latin America. I know from previous conversations with you that you have something similar in mind, or you imagine something similar for Africa. Is this the future of globalization, with somewhat inward-looking regional blocs trading with and also competing against each other?
I think regional trade, Andy, is just something that needs to be encouraged across what was previously known as the emerging market or emerging world, because it was used to be intermediated by the previous colonial powers or the dominant powers of the day. So if you actually open our borders, now Africa is so far behind. If you want to fly from one African capital to another, you've got to go mostly through London or Paris, or nowadays Dubai, maybe Istanbul. You cannot do it from country to country. It's just, except maybe in East Africa where they've got their act together. So if you open those corridors, you increase efficiencies massively. Now, what they've done, they've already created the communications infrastructure, mobile telephony, broadband, etc., are starting to work. So it's not difficult. Europe lies, the huge market lies very close. India, China, very close to Africa from the shipping point of view. It should be possible. And may this crisis spur the countries who need to do it into action, because Africa has been very, very slow at achieving its intra-African trade growth that it's been speaking about for years.
Yeah,
okay, I want to bring in an audience question and throw. Sorry, please, before we do that, yes, go ahead, Josephine.
Yeah, I was just going to compliment that. I think, just adding that if this crisis did nothing else, during the scramble for masks and all kinds of health equipment, when, countries in Africa were also having to compete with bigger players around the world for sort of a limited resource for a while, I think it just made very sort of distinctive the need to start having local manufacture, local supply chains, realigning our supply chains regionally. And I think this crisis just heightened that, and hopefully will drive some action to say, we don't want this to happen again, but in future, if there ever is a crisis, we have the internal capacity, particularly if borders close again.
But Josephine, is regionalism truly a vision for global prosperity? Isn't it a recipe for inefficiency, protectionism, nationalism, but most importantly, doesn't it favor the rich world?
Well, I mean, there's got to be a collective discussion. I think we do need to find that balance between multilateralism and all collectively having this global trade environment, but also needing to develop trade, manufacturing, productivity in a region that's still very agro-dependent, where we have huge unemployment. We need to create that environment where we're fostering growth. And I think it's not going to be easy by any stretch of the imagination. And I think that, in the previous conversation you were having, it became evident, whatever region you're dealing with, that balance between global trade, regional trade, and even within the region, we have stronger African countries and we have more emergent within Africa itself. And how do we ensure that, again, the $1 million question, how do we ensure from the smallest to the biggest, there is some balance? But definitely, I think what COVID has done is shown us for Africa as a region, we need to take advantage of the free trade agreement and hopefully lift the opportunities on manufacture.
I think Josephine is absolutely right.
Question from the audience. This one from. Sorry, can we? I'm sorry to interrupt, Henry. There's a question from the audience that I think you might be interested in here from Camelia Dumitriu, who is the professor of strategy and risk and crisis management at the University of Quebec at Montreal. She asked, how will globalization change in the post-COVID-19 era? Will countries be adopting self-sufficiency policies when focused on rebuilding their economies? Hendrik.
That's a very, very good question, Professor. We did a paper and a piece of work on it, and our view is that this will also be forgotten in due course. So people will initially focus on self-sufficiency, because you always fight yesterday's war tomorrow. You will initially focus on self-sufficiency, and then price will come in. We don't see this as a world of complete deglobalization. We see that post-COVID, the big move is the change in the global order. We have seen Asia distinguish itself in its competence relative maybe the rest of the rich world. We have seen different methods work well, and we have seen the rise of technology which is available to both governments and the private sector. So in short, necessary localization and onshoring, but we don't think this can last forever, because ultimately trade is what drives wealth, and people will always go back to trade. And let's think about where emerging markets started with the East India Company or Marco Polo.
Okay, let's go to Dambisa Moyo. She's a global economist who sits on the boards of 3M and Chevron. And I spoke to her yesterday about her recent op-ed calling for more aid for Africa. Take a listen. Dambisa Moyo, welcome to the program.
Thank you. I'm happy to be here.
A decade ago, you famously criticized foreign aid for developing countries, saying that it fueled corruption and fostered dependency. Now you're calling on the United States and Europe to launch a Marshall Plan for Africa to save the whole continent from the ravages of COVID-19. What's behind this change of heart?
Well, and it's actually not a change of heart. I've been very clear in the article that the view that I espoused 10 years ago is still very much valid as far as I'm concerned today, which is to say that any type of aid intervention that is open-ended and is given in perpetuity is extremely damaging politically and economically to the recipient countries. And you've just highlighted a couple of the reasons why: the issues of dependency, corruption, but also concerns around inflation and Dutch disease. The article is very clear that the types of aid interventions, such as those of the Marshall Plan, are and can be effective. And I was very clear in my book 10 years ago also. The point being that the Marshall Plan, which was from 1948 to 1952, was a short, sharp intervention and finite. And critically, it did not create the types of dependency that we've seen in aid programs more recently. Moreover, the aid program of the Marshall Plan was about $135 billion. I'm suggesting that Africa, given the complexities of the continent and the size of the continent, would require something much, much greater than the $62 billion that was originally pledged by the IMF and the World Bank to tackle the COVID impact. The more important thing is that I believe that there are three key reasons that mean that this argument for a Marshall Plan for Africa is extremely valid. One is really we're in the middle of a global pandemic, and the ability to assist African countries to combat the health pandemic, I think it would be enhanced by this type of an aid program. The second reason is really an economic one. We've seen a lot of stabilization and stimulus packages across Europe and the United States. An aid program such as the one I proposed in The Economist magazine would really help not only to provide a stabilization of very challenged African economies, but also really be a catalytic in terms of being an opportunity for stimulus. And then finally, really, and this again is in the article, I think there's a moral imperative, certainly for Western countries as they continue to pursue ideological beliefs in liberal democracy and market capitalism. The argument here being that Western countries are lagging behind China, is specifically, as we've seen China in the last few decades, certainly in the last decade, really amp up its efforts in terms of foreign direct investment and trade across not just Africa, but the emerging world in its totality.
We'll get back to China in a minute, but let's talk about Africa. Has Africa changed? Are the conditions that prompted your criticism a decade ago no longer relevant?
No, they are relevant in large degree. It certainly is the case that the economies in Africa remain extremely vulnerable. So, for instance, we know that according to the World Health Organization, really governments should be providing about $35 to $40 per person per year in order to ensure economic healthcare is provided to their population. And many countries in Africa are just not able to do that. We also have the issue of slow and low growth. Many African countries continue to fall way below the sort of 7% number that really we need to see in order for them to double per capita incomes in a generation. According to the Rule of 72, that number is really more like a 3%, but given the low levels of economic development on a baseline, I believe that the numbers would have to be much higher in order to see real meaningful progress in a generation. And then obviously politically, we are seeing that, on the whole, things are much more stable than we certainly saw in the 90s, where the Stockholm Institute talked about Africa having more civil wars and more civil unrest than the rest of the world put together. I mean, it has stabilized in some respect, but I think there's still many vulnerable hotspots and concerns around spats from the disorderly migration, but also concerns around terrorist activity, environmental degradation. I mean, I think this confluence of factors are real areas that Africa continues to be challenged with.
Well, the West most certainly has changed. Certainly in the past few years, it's more inward-looking. There's more talk about self-reliance. Trump's America shows no inclination whatsoever to lead the world, quite the opposite. COVID-19 has brought on this sort of dog-eat-dog international mentality between countries. What makes you think that the US and Europe right now can rise above all this and pour funds into Africa?
Well, look, I always pride myself as being a realist, and I was very clear in the article that some may view this as fanciful and actually really ill-timed as a proposal because of the issues that you just raised. We're in a world of quite a lot of evidence of deglobalization, but beyond that, we also know that many of the developed countries that we're looking to across Europe, including the United States, have enormous debt and enormous deficits, and certainly in debt terms, we haven't seen the debt to GDP ratios, that we're seeing today over the past 100 years, and so really in a vulnerable place themselves. But again, I think that this is not really a call for sympathy or for some kind of asking for generosity just on the top of it. It's really a claim to the moral imperatives of the Western society. If Western society wishes to continue to be a leader, wishes to continue to innovate, and certainly in the case of immigration, wants to avoid disorderly migration, which we've seen over the last few years, and certainly in Europe, I believe that they need to be invested in a much more active way across the African continent and in the emerging markets more generally.
So geopolitics informs some of the thinking behind your call for a Marshall Plan, right? I mean, you see this, as you say, as a way for the West to regain influence on the continent lost to China. Some might say that this shows something of a Cold War mentality. Why not ask China to join in? Why not make this a big global US, European, Chinese effort to rescue Africa?
Well, first of all, China's already there, so I don't think they need to be co-opted or convinced. They are the largest foreign direct investor, the largest trade partner, and now the largest lender in terms of debt across many countries, both developed and developing, but certainly across Africa for many, many countries. And so it doesn't seem to me to be a pitch that needs to be made for the Chinese political class. Whereas I think this is a story and a narrative that and that I basically was worrying about 10 years ago when I wrote Dead Aid, because my concern was that there was always going to come a day where we would have a lack of enthusiasm around delivering aid to Africa. And my concern was that African countries would be ill prepared for it. And I think we are all ill prepared for the global pandemic. But, clearly African countries which hold a lot of international debt and are struggling, not just in terms of the cost basis of the amount of debt returns that they have to pay on terms of interest, but also as a top line revenue number, the fact that commodity prices have softened and the prospects for global growth have weakened on the back of this virus really means that the narrative around Africa is becoming even more challenged.
So, as you say, China is already a major player in Africa. Much of the investment is channeled through Xi Jinping's Belt and Road Initiative. Lending within that program has already reached several $100 billion. What do you think? What impact do you think this crisis is going to have on Belt and Road? Does it put it on hold, or could it be powerful enough to derail it altogether?
Well, too soon to say is what I would say. I was somebody who was very much of the belief of a V-shaped recovery early on. I've had the privilege of serving in a number of corporate boardrooms, and I spent a lot of time with public policymakers. And I realized quite quickly that was a little bit foolhardy, because clearly there was some deeper entrenched structural problems that have come to bear. In the case of China, the broader emerging markets have actually not had a very good story since 2007, which is, I believe, when we saw the last highs in the market. So since then, we've had a really challenged environment versus emerging markets. So what do I think China is going to do? I think that there is and remains a longer term imperative for them. And so in many ways, they could pick up a lot of assets on the cheap already because of their very powerful position as a lender to many governments in South America, across Africa, and broader emerging markets. I think that they have the upper hand and a lot of leverage in this environment to be able to renegotiate terms. And we've seen some of this in terms of distressed assets. And we know that in some cases, it's not just about extending changing coupons and extending maturity dates. It's really about getting a quid pro quo in the form of natural resources, which I think China will continue to be quite aggressive on. I can't imagine that they wouldn't take advantage of this opportunity. So if you look on a reserve basis and you look on the fundamentals of how the political class in China thinks about these things, it seems to me that they will continue to be quite aggressive.
Last question on emerging markets generally. One of our New Economy Forum delegates, James Crabtree, wrote recently in Foreign Policy, I believe, that the pandemic brings an end to the very idea of emerging markets, that fast-growing, poorer countries become the darlings of financial investors. Is that assessment too harsh, do you think?
Well, listen, I have spent a lifetime being very pro-emerging markets. I felt that the underlying factors, capital, labor, and productivity, were very compelling as an investment thesis. These countries had relatively low debt. They had both quality and quantity of young population that could drive economic growth. And of course, in terms of productivity, they were importers of technology, they were importers of a lot of ideas, rule of law, etc., that had proven over time to be beneficial to growth. But that actually has not materialized, and I think that's somewhat disheartening for someone like myself to accept. As I mentioned a moment ago, it's been several decades that many people from the BRICS to many others have been extremely optimistic of what would happen in the emerging markets, and they've continued to lag behind. So, fundamentally, are there a group of countries that have a narrative where we've remained optimistic, but it's continued to disappoint? I'm afraid the answer is yes. And in a world that's becoming more deglobalized, more competitive, more zero-sum, I fear that there's going to be a sort of, dare I say it, come to Jesus moment around what the path forward is going to be. I mean, I worry deeply that we see a reversion towards more import substitution, much more of the sort of tried and tested models of economics that actually did not deliver sustained economic growth. But we are in a point of desperation in many ways. And I think the confluence of many factors, from income inequality and climate change and debt and deficits and also concerns around demographic shifts, I think makes it a very, very lethal cocktail.
Dambisa Moyo, thank you for taking the time to be with us.
Andy, thank you for having me.
So while we were listening to Dambisa Moyo, questions came coming piling in. Dambisa talks about this lethal cocktail. Here's a question that might put things in a different light. And it comes from Peter Burden, who's an advisor based in the UK at the Siaka Africa consulting firm. And he asks, we hear about the chance to reset Africa after this crisis. Do you see any opportunities that may come out of this pandemic? Josephine, would you like to take that one first?
The answer is yes. I touched on technology. I think we're going to see a real sort of acceleration in things happening, like I said, in e-commerce. I think blockchain technology is going to pick up just where we need more traceability and transparency around transactions. I would also say in the renewable sector, there's some really interesting dynamics happening. The whole issue of energy access is becoming so much more critical in the light of COVID-19, and we realize that more money is going to need to be spent in the healthcare sector. We're going to need more regional health centers. To do that, we need energy. To do all the technology work and get all the broadband, we need power. And to get into these more off-grid remote areas or in the distributed areas, renewable energy now is more accessible, is more available. Prices have come down, technology has improved. And what's great to see, and what I'm seeing in my network, is the private sector really leapfrogging ahead, particularly in the commercial and industrial space, to drive more innovation around renewable energy. So not dismissing or minimizing the challenges, but I think there's a lot of opportunity that this crisis presents to us to take advantage of and see some shifts in how we do things on the continent.
Hendrik, a question for you from Josephine. A question for you from Muyaka Ulubi. I'm terribly sorry. I'm massacring this name. Who's the FA group leader at GFA Consulting Group in Nigeria. And she asks, what advice would you give SMEs, small and medium-sized enterprises, with regards to business continuity strategies post-COVID? What will be the biggest challenge for SMEs post-COVID?
Thank you very much, and a very appropriate question. Just before that, I must just challenge Dambisa's lethal cocktail conclusion. There are countries which have a lethal cocktail, but I again want to remind her and everyone else that the Asian emerging markets have been a tremendous success, and in fact are now competing for leadership in the world, not just, and that's why you're getting the split world. So let's just be quite clear about dynamism in emerging markets. There are some big winners and there are some losers. I'm a bit worried about Africa, like Dambisa, but the SMEs in Africa have a huge opportunity given the technology that's available right now. The platforms, firms like Alibaba and others are rolling out, allow you to sell your product to anyone in the world without rate friction costs that you used to have, and to deliver that. And I've seen a number of businesses that are being built in fairly low cost places with dynamic populations that aren't over-regulated. And as long as the states and the government stay out of the way, this can work. And, for example, we had the bizarre situation in South Africa where the government banned domestic e-commerce as part of its COVID strategy, which was completely wrong. They've luckily stepped back from it after huge pressure. But I do believe 3D printing, all of those opportunities, and with bandwidth, and we're invested in tower companies across the continent. Bandwidth is being delivered. And with that, you can compete in far greater ways and far more effective ways than before. So please look out for the cheap technologies available on the big global platforms like Alibaba.
And if I just compliment
one more question
on
from
that,
Ayo.
sorry.
Wait.
No, I was just
Go
saying
ahead.
there was, on the SMEs and technology, I think there's a lot of what I'm seeing is a combination of local innovation with some of the innovation coming out of Silicon Valley, coming out of China, and Africanizing to our informal way of micro SMEs, and really that, and it's actually quite exciting what's happening on the payments and e-commerce and last mile delivery world by pulling from the best of other countries and bringing it into our sort of localized, informal way. So I think there's positiveness for a lot of these SMEs and micro SMEs.
From Ayo Bajomo, who's the treasurer at the Bank of Industry in Nigeria, and he asks, or she asks, sorry, how can partnerships be forged to attract and channel funds into emerging economies for industrialization and at the same time create benefits for all stakeholders, local partners in emerging markets, local populace, fund owners, etc.? Hendrik, would you like to have a go at that one?
And that is where where governments can become hugely limiting factors. I think it's absolutely vital that there's domestic pressure on governments to allow space for international and for foreign investors who are very often staffed with locals, who very often understand the environment well, but they need to be able to operate. And for example, in Nigeria, one of the big issues over the last few years was foreign exchange, because there's an unrealistic foreign exchange market, being set by government. Governments need to open up, and my sense is that this COVID pressure and these weak economies will actually force governments to step out of the way and give entrepreneurs and investors a chance and simply make rules and ensure that all parties observe them properly. So that's my hope. But if that doesn't happen, then small businesses will suffer, or will continue to suffer.
Josephine, we're going to give you the last word on this.
No, I agree with what Henrik said. It's going to be a combination of government sort of freeing up to let the market forces interact, technology, and I'm a big optimist and believer in the human spirit. And I think even through this crisis and the collective working together, there's a lot of opportunity and new ways of working that we will see for emerging markets.
We're going to have to leave it there. We're out of time. Josephine and Hendrik, thank you again for joining us today. We're grateful for your participation and for your perspectives. I'd also like to extend my thanks to Dambisa Moyo and Luis Alberto Moreno for taking the time to join our conversation, and to our audience, both within and beyond the Bloomberg New Economy community. Thanks for joining us. We invite you to our next conversation, Public Health on Life Support, focused on the challenge of rebuilding global public health in the wake of COVID-19. That's on Tuesday, June the 16th. Follow the conversation with @NewEconForum on Twitter or like us on Facebook. And to learn more about other upcoming events, please visit our website at